All right, thank you for that introduction. So tonight I wanted to kind of chat about, like Tim and Azad mentioned, the crazy market that we're in and what that means for buyers when you guys are writing offers as it mostly pertains to financing. So we all know it's a little bit crazy. We're seeing these over ask prices going. We're seeing unconditional offers and we're seeing buyers doing things that they normally might not otherwise do if it wasn't such a crazy market. And so what am I referring to? Mostly, I want to talk about unconditional offers. So we've all heard of them. We all know they come with risks. So tonight I want to touch on what actually is an unconditional offer and why is it perceived to be a stronger offer by a seller? And then what risks are associated with writing unconditional when you're the buyer? So first off, what is an unconditional offer? So this is where you're writing an offer on a home and you do not put in any conditions. No financing condition, no home inspection condition, no condo document review condition, nothing. So you're basically offering the price and you're signing on the dotted line saying, I am 100% going to purchase this home. It doesn't matter if, down the road, I find out that there's a mold problem, or it doesn't matter, if I run into financing problems, I'm going to take this home no matter what. So there's no way of backing out once you write that unconditional offer. So what are the risks to you as a buyer? So again, I'm going to speak specifically tonight to the financing condition because this is my area of expertise. But Tim and Azad, if you want to reach out to them separately, they can speak to some of the other conditions. So typically when we're purchasing a home, we need financing unless you're planning on paying cash, which in our game of investing, we typically try not to pay cash and we try to leverage the bank's money. So to obtain financing, not only do you as a home buyer need to be approved, but the property you are purchasing also needs to be approved. So I've had a ton of home buyers come to me saying, oh, well, if I'm pre-approved, I can write an unconditional offer. But that's not true. So a pre-approval is where we will look at you as home buyers. We will look at your credit, your income, your overall application and say, hey, you know what? Go ahead. You're pre-approved. Everything looks good. You can go ahead and house hunt and write an offer, but make sure when you're writing that offer, you put in a financing condition. Because then once we take your income, documents, credit, all of that, and that accepted offer, we then have to package that all up together, send it to the lender and the insurer, if we're doing CMHC insured mortgage, for review and acceptance. So you technically, as the buyer, are only 50% of the equation. The property is the other 50%. So while you may be pre-approved, what if the lender doesn't like the property that you've written an offer on? What if there's some random reason that we maybe don't know about, this property's been red flagged, maybe the property value doesn't come in, which is something we're going to talk about. Any of these situations we could run into. You could be a perfect AAA client, have no issues with you as a borrower, but then when that property gets to the lender and the insurer, there might be an issue. So one thing we really wanted to touch on tonight is property values and unconditional offers. So what happens is when you write an offer on a home, and let's say we're going to do minimum down payment because we tend to leverage our properties. So let's say we're going to put the minimum down, and let's say we write an offer on a home. We go see a home, it's listed for $500,000. You get into multiple offers like Tim and Azad mentioned in this crazy market, and you end up writing an offer for $600,000. Well, that's $100,000 over asking. And you might be like, oh, I'll never pay $100,000 over asking. But I will tell you, we've been seeing it. We've seen $140,000 over asking recently. So we have seen a lot of multiple bids going extremely high and pushing property values. So that's $100,000 over ask. So we then take your offer, we take your application, your credit, all of that. We send it off to the lender and the insurer for approval. But then the lender comes back and says, hey, the lender or insurer doesn't support the value that you've paid at $600,000. They would like to do an appraisal. So what that means is that great that you've written the offer at $600,000, but the lender and insurer have kind of looked back through the last 90 days quickly and not seen anything in their system in that price point for what you're purchasing. So they can't very well say, oh yeah, we'll lend on this higher price point that you've bought at. They instead want to do their due diligence. They're going to send an appraiser out to the property to go view the property and do a full appraisal, compare it to recent sales that are comparable in the last 90 days to determine if that property is in fact worth the $600,000 that you're paying. So one glitch here that right off the bat is that as soon as that appraiser needs, or as soon as that insurer lender needs an appraisal, guess what? The appraiser has to go out and view that property in order to do that appraisal request. Well, if you haven't put a financing condition in your offer, the seller of that home can outright deny the appraiser access to the home because you didn't disclose that you were needing financing. So if that appraiser can't gain access, they can't do the appraisal, the insurer and the lender are going to flat out decline your financing. And now you've written an offer on a home, can't get the appraisal done, have no financing in place, and you're stuck with that property. Second thing, let's say the sellers are great. Tim and Azad sweet talk them, and all of a sudden now they're saying, okay, yeah, we'll let your appraiser in. Well, let's say the appraiser does their thing, they do their comparables, and they come back, and the insurer or the lender comes back and says, hey, okay, we've done our internal appraisal. You guys wrote an offer at 500,000 or listed at 500,000, wrote an offer at 600,000, but the appraisal is coming back and verifying that the value is only worth 550,000. So smack dab in the middle. So now what happens? Well, now if you were putting down 5% on 500,000, you would have put $25,000 down. If you were going to put the minimum down on 600,000, which is what you wrote that offer on, that's a $35,000 down payment. But if you wrote at 600,000 and the lender and insurer are saying it's only worth 550, they're only going to lend based on the 550. So that means your down payment on 550,000 is 30,000. Simple, easy. You would plan on putting 35,000 down anyways. 30,000 is great. But you're forgetting that at 600,000, you're short $50,000 for the seller. The seller's expecting getting 600,000 and the lender's only going to lend you based on 550. So that $30,000 down payment, now you have to add $50,000 to that to come up with the shortfall. You are now at an $80,000 down payment that you need to come up with when you would only planned on putting 30 to 35 down in the first place. So for a lot of people, that's a big stretch to have to come up with more than double your down payment. But that's what happens. If the appraised value comes in low and you didn't protect yourself with a financing condition, you have no way of going back to the seller and either negotiating the price or, getting them to come down in price, or maybe you do have the funds and you want to come up with the shortfall, or walking away. With a financing condition, you have the ability to say, sorry, I'm not waiving my financing. The property value did not come in. You walk away and you get your deposit back. If you didn't put that financing condition in, you would either have to come up with that $80,000 or walk away from the property. But if you walk away from the property, you lose your deposit. And Tim and Azad can touch on this, but if that seller has to turn around and relist that property and sell it again, and if they can't sell it for what you originally offered, then you would be also on the hook for their losses as well. So they can file a civil claim. And I'll let Tim and Azad talk about more on that side of things. But as far as financing goes, that financing condition is critical because, again, you're only 50% of that equation. And we are seeing crazy offers out there. We're seeing crazy conditions, but you really do need to protect yourself because this is a big amount of money and it is a legally binding contract. So it's one thing to want to have this great offer and win in an offer, multiple offer situation, but it's another thing to put yourself at a huge risk that you're not prepared, where if you have $200,000 and you're like, yeah, worst case, if this value comes in short, I'm okay. That's one thing. But if you are putting the minimum down and you don't have that surplus there in case something goes sideways with the financing, then you could really be putting yourself in a tough spot. So we wanted to touch on this tonight because, again, a lot of people are getting really anxious. Maybe you're not winning in those offer situations and you're thinking, oh, if I went unconditional, I could have a house. But at the same time, it's a really risky way of proceeding. And you really, really do need to protect yourself and have these in-depth conversations with not only your realtor, but also your mortgage broker before you're writing any of these types of offers. So that's kind of what I wanted to chat about. Tim and Azad, that's it. I don't know if you have anything else that you kind of want to add to that, but as far as financing goes, that's
yeah, thanks, Danielle. Yeah, maybe not on the finance aspect. I think everybody understands that. But what Tim and I are seeing just lately is unconditional on condos. And what we have to stress about that. And Danielle, as well, some condo buildings aren't even, you can't even get financing on them unless you're putting 20% down. So,
Yeah, so funny enough, I had a little blurb written about condos, but I wasn't sure if I was going to take
oh,
up too much time. But yes, for condos, just to kind of touch on a couple things, post-tension cables is one of those types of condo buildings we're seeing a lot of right now. And there's only 3 or 4 lenders out there that will lend on post-tension cables. So if you're a home buyer and you're writing an offer on a post-tension, if you're financing, if you only fit at certain lenders, you may not get approved. Secondly, condo doc review. A lot of times people forget, but when you go to the lawyer's office, there is a Condo Board Act of Alberta. They are required to provide certain condo documents in order for a lawyer to fund or close on a property. If you don't put that condo doc review in, and you find out when you get to the lawyer's office at the end that there's not the required condo doc paperwork available for the lawyer to close on your purchase, now you're at the end, you're supposed to be taking possession, and you have no way out of that contract and you can't close on that purchase. And then thirdly, it's a condo doc. You just don't know. I mean, some people like to read them themselves, but we always recommend a professional condo doc review. There is numbers after numbers after numbers. There's budgets, there's allowances for repairs. You don't know what you're getting into. You could be hit with a special assessment down the road if those condo documents are not reviewed properly. And that could cost you tens of thousands of dollars if you didn't realize that there isn't enough money in the condo reserve fund study to cover repairs that might need to be done in the next few years. So yes, condo document conditions is another one of those that is extremely, extremely risky for multiple reasons.
awesome. Thank you, Danielle. For anyone looking to get into investing, your first step is always to work out where you are financially. We always send our clients to Danielle. We've been working with her since 2006. So Danielle has actually been through 3 downturns here in Calgary with us. And she's helped our clients every step of the way. As Tim said, she doesn't just get you a mortgage, she gets you a mortgage plan. And we're seeing, Tim, people go on to their 5th, 6th property working with Danielle, where maybe if you went to your bank, that wouldn't happen. So she's definitely worth a chat to. Yeah.
Yeah. So thanks again, Danielle. We'll